stocks only go up.
Bruh.
In this video, I'm doing what is probably one of the most in-depth analyses on YouTube for CIIC stock or Arrival stock. We're diving beyond the investor presentation and connecting the dots that really matter. This is not your typical EV stock video. I'm going to be sharing everything that I find that's surprising, shocking, and puzzling in this video. Let's do it. What's going on, everybody? My name is Matthew. Welcome back to my channel, and today we're talking all things Arrival. Currently ticker symbol CIIC, but soon to be ARVL. We're back on the phone microphone for this video, but I have a new mic on its way, so thanks for being patient. Somehow I have found myself doing back-to-back EV videos, but if you're new to the channel, I usually try and cover stocks that most people aren't talking about, like Upwork, The Trade Desk, Celsius, and Maxer. So subscribe if you'd like that content regularly. But today I'm giving my honest opinions on Arrival, the EV maker, after some detailed research. Give me the format. First, a really brief overview of Arrival. Second, we'll take a look at some pros and cons of Arrival and maybe some tidbits and little facts that you might not have heard before. Third, a super in-depth look at Arrival's claims, expectations, and projections. And finally, fourth, closing thoughts. So make sure you stay till the end because I'm pretty sure you haven't heard some of the points that I'm about to make in this video. No time wasted, let's get right into it with part one, a very quick overview of Arrival. Now I know you guys have probably seen a couple of videos on them by now, so we'll keep this short. They're a UK-based startup that plans on manufacturing electric buses, vans, and smaller commercial vehicles that will be cheaper to produce, partly due to their unique microfactory approach. This merger with CIIC is expected to close in Q1 of 2021, and with this merger, Arrival will get $660 million in cold hard cash via SPAC, which they'll then use to expand aggressively. They expect to roll out their first bus for sale in Q4 of 2021, so their very first actual bit of revenue should be coming a year from now. Pre-merger, Arrival is already one of the most valuable startups in the entire United Kingdom. The merger is also backed by BlackRock, UPS, and Hyundai. But here's the thing. That is really not as big of a deal as people seem to think, in my opinion. And that's because BlackRock owns pretty much everything. A study showed that the big three, State Street, Vanguard, and BlackRock, have become the largest shareholders in a whopping 40% of all publicly listed firms on the US. So yes, it's a household name, but they kind of have their hand in a bunch of different companies. I wouldn't take this as an insanely bullish point. And the $110 million investment from Hyundai is also really cool, but that's actually about under 1% of their cash on hand, so this is not a big bet for them. In fact, it's not their biggest bet in mobility either. For example, if you look at Hyundai's other investments just in the mobility category, they actually plan to make a $1.6 billion joint venture investment with Aptiv. Finally, this article claims that the biggest recent boost to the stock was the fact that Jim Cramer was bullish on CIIC, saying that as he was presented with the facts such as its $5.4 billion post-merger value, and its unique microfactories, Cramer had an exclamation, "Just buy it." Well, I actually went and found the clip that I believe they're referring to, and the article took a lot out of context. I'm going to play it right now for you, and while we watch, ask yourself this. Does it really seem like Cramer did any analysis on this company? Did he think about their fundamentals, projections, valuation, or any of that? Keep that in mind as I roll the clip.
Did you take a look at this one? Let's start with CI, if we can, guys in the control room, CIIC. Right, which is CIIG Acquisition Corp, which announced a deal with a company called Arrival. Did you see this one, Jim?
That must have eluded me.
They're talking $5.4 billion. Let me get my, I'm trying to look for my notes here. Here it is, $5.4 billion. By the way, Arrival, Jim, just in case you didn't know, has developed a new method of designing and producing zero-emission vehicles using its proprietary hardware, software, and robotics technologies and low-cost microfactories.
You better not question that.
For them.
Don't question that. Just go buy that.
Just go buy it. Look at what, I mean, it's
David,
like you're a SPAC.
The more work you do on that, the less time you're going to have to be able to buy the stock.
We have more early stage companies hitting this market.
To me, the fact that Cramer said that one has eluded me pretty much proves that he didn't do any prior research onto CIIC before the host brought it up to him. He also kind of scoffed in disbelief at the $5.4 billion valuation, and maybe I'm reading the situation wrong, but it also seemed like he said just buy it, as if it was like, what the heck, all these EVs are running up so fast, if you don't buy it now, you're going to miss it anyways. It was almost as if he was being sarcastic and joking around about how hot EV stocks are right now. So for this article to say that Cramer is bullish is incredibly misleading in my opinion, and I think that's just a wrong thing to do. So I want to make sure I address this and make sure you always verify. But thank you for indulging in that tangent. Now let's get on to part 2, the pros and cons of Arrival. Alright, so for pros, there seems to be less competition in the EV commercial space when we're talking about vans and buses versus, say, the EV passenger space where NIO and Tesla compete. Additionally, Arrival is vertically integrated, which means it builds everything itself, it does everything on its own, which is really great to see. The third pro is their microfactories, which they say can be built in an average warehouse of 20,000 square meters. But the thing is, 20,000 square meters actually seemed kind of big, so I went and asked how many of these warehouses are actually up for sale. Of course, I went on a website and looked it up and set filters to warehouses between 20,000 and 40,000 square meters, and there were currently about 96 warehouses for sale across the entire United States, concentrated primarily in the South and a bit sparse in the Midwest to West. I just thought this would be an interesting tangent, so some food for thought. Another pro is that the UK is banning the sale of new diesel and gasoline cars by 2030. Arrival expects profitability for the business by 2023, and we'll get to why that is a very bold prediction and should not be taken at face value. And finally, for the pros, they have an extensive portfolio of intellectual property. There is a lower total cost of ownership to fossil fuels, but we've been knowing this. And they already have $1.2 billion in orders. But, what is that? That little number right there. If we look at that footnote, this $1.2 billion in sales is based primarily on orders from UPS and can be canceled or modified with an option to add an additional 10,000 units, so virtually none of this is for certain yet. To me, this is the definition of counting your eggs before they have hatched. Now we move on to the cons. Their first vehicle for sale, the bus, is not going to be for sale until 1 year from now, and vans are not coming until the second quarter of 2022. So because they have virtually no revenue until a year from now, the company that we would be buying today would be primarily almost solely based on expectations and projections. Which brings us to con number 2, inconsistencies in projections. Exhibit A. They say that in order to produce 10,000 vans per year, they need a 20,000 square meter factory. But their main factory right now in Bicester, I don't know if that's actually how you say it, is only 120,000 square feet, which translates to about 11,000 square meters, or just over half of what they said they needed for an average factory. So naturally, you may expect that with half the amount of space, they produce half the amount of vehicles, maybe 5,000 vans per year instead of 10,000. Well, despite being half the required size, the Bicester micro factory is still expected to produce 10,000 vehicles per year. Now, to be clear, that expectation came from one article. Another article said that Arrival did not comment on the capacity of their Bicester plant. But if the article that cites 10,000 expected vans from the Bicester plant, which is half the expected size, then management is either way overestimating how much space they need to produce their vans, or they're not getting their projections correct. And this may seem like I'm getting nitpicky or I'm being a little too harsh, but the fact of the matter is that these projections are crucial because the majority of their investor presentation is based on projections. Now, even if that article citing 10,000 for the Bicester factory is incorrect, the fuzziness and lack of clarity surrounding the actual capacity of this microfactory is a clue as to how early stage this company is. I mean, let's just take a look at the investor presentation. Management expectations, per management estimates, estimates again, projected timelines. Their entire profitability, EBITDA, sales volume, and revenue is completely projected based on no historical financials. And sure, every company makes projections, but usually they use significant financial history, of which, again, Arrival has none. And again, the reason why I'm harping on the projected capacity of these microfactories is because that is such a crucial projection. If your volume projections fall short, your revenue projections fall short, your profitability falls short, your cash falls short, your expansion falls short, you get where I'm going with this. Another questionable management projection, or I guess goal, is this one. They want 1,000 factories by 2026, which would equal, according to their own capital expenditure estimates, $44 billion to be spent by 2026 on new microfactories. So with projected revenues of $14.1 billion, not even speaking in terms of net income or cash flow, where are they going to get $44 billion from? unless they have some sort of trick up their sleeve that's either a lot of debt or a lot of dilution. Additionally, 1,000 microfactories would imply the capacity to produce 10 million vans per year, because 1,000 factories times 10,000 vans per year, it is 10 million. But in 2024, they're projecting around 258,000 cars and vans in sales volume. So stay with me here. Let's say they triple, no, 5 times. Let's say they 5x their prediction from 2024 to 2026, which by the way would likely be a big overestimation. In other words, we're multiplying their sales volume for 2024 by 5. That puts them at 1.29 million units sold for 2026. At the same time, they'd supposedly have a production capacity of 10 million. This means they'd be using about 13% of their total capacity, and to me, that sounds very inefficient. Why would management set a goal for 1,000 factories when their own projections wouldn't even justify that? And I know we're getting into a lot of numbers here, but we're almost through it, so here we go. Their financial projections. Without even producing their first vehicle for market, they make very bold projections, such as a 5x in revenue between 2022 and 23, then 3x to 2024. Now, to be fair, they say that the van market consists of 2 million vans, so their 136,000 van projection for 2024 would actually only make up about 6% market penetration for the 2025 van market. Now, I'll give that to them. That could certainly make sense, but again, who can be sure given that they are pre-production right now? Okay, so that was a lot of numbers. Let's just take some time and recenter ourselves, because this next part, their valuation, is very important. So here we go. And by the way, I understand this all might sound kind of harsh, but I'm just trying to emphasize or point out some facts that I don't see many EV channels covering, and I still think they're important to know. So if you appreciate the in-depth research or the contrarian view, I would really appreciate just turning that like button blue. This brings us to our final con, the valuation versus the market cap. That's the same thing. Never mind. That brings us to the final con, the unknowns versus the market cap. Let's calculate the total valuation of Arrival just really quickly. CIIG shareholders, or people who are buying CIIC, would own just 4% of Arrival after the merger, meaning if we take the market cap of CIIC today and divide it by 4%, we get to the value of this whole pie. So we get an approximate market cap of almost $22 billion at today's prices of $27.17 per CIIC share. The way I've always seen it is the higher the valuation, the more the company has to prove. So we're paying $22 billion for a company that has no revenue until 1 year from now, has $1.2 billion in potential revenue, much of which is cancelable and very optional, doesn't actually know if their 10,000 vans per year projection for the microfactories is correct, and whose revenue and profitability projections are really just based on management's estimates and no financial history. For context, some other companies worth about $20 billion include Cloudflare, Zillow, Viacom, Skyworks Solutions, and DraftKings. To me, it makes no sense why Arrival at this stage in their business is even close to being worth to any of those companies I just mentioned. Now for part 4, my final thoughts. With all this in mind, I'm going to be putting down a sizable position for CIIC. No, I'm kidding. It's a joke. I was joking. Okay, it's no secret I'm not a huge fan of the EV SPAC hype right now. I think given the proper valuation, Arrival could be a really interesting and exciting spec play. But at this point, I'm not even considering them as a long-term investment. Now, as a trader, that'd be a totally different story, because even though I just laid out everything that I think is wrong with the fundamentals, it will probably still rise 20% tomorrow, and those short-term gains could easily keep rising. Now, I think EVs are certainly the future, and there's a huge market for them, do not get me wrong. But when a pre-revenue, pre-production company gets a $20 billion price tag based on hype, that is a huge red flag to me. I think there will be EV companies like NIO and Tesla, which I personally own, that will still be around at these valuations or higher a few years from now. But if this is a bubble, which I think we're in the beginning stages of, then I think a lot of these EV spec plays are going to be trading at much lower multiples than they're at today, 1 to 2 years from now. Now, 2 years from now, if Arrival starts putting up some serious, real numbers, then maybe I'll consider it. But I think it is way too early in this company's life cycle to be investing at these valuations. And usually, an early investor is given a discount for taking on more risk in the early days, but Arrival is at by no means any sort of discount right now. And lastly, just in general, I don't think you should be afraid to lock in any profits here. There's no shame in just taking those gains. This whole EV bull run could last another month, maybe even up to a year, but I think eventually the market will correct itself and bring the stocks it needs to bring back down to reality. I just don't want to be holding those names when it does. It's kind of hard for me to go against the grain, but if you enjoyed this video, please consider smashing that like button, subscribing, and checking out our quote of the day. You might just learn something. Make sure to follow me on Instagram for daily posts about my portfolio, stocks I'm watching, and all that good stuff. And if you're watching to this point in the video, you are the real MVP. Don't forget your peace and thank yous.